You must have heard that SRPT is going to join the small cap S&P 600. This was announced around 2 days ago. That was probably on the 27th or thereabout. So you definitely also know that a week ago the company did some refinancing. So thanks to one of the viewers on the channel, Inhibitor, he or she asked us about the buyout thesis, our buyout thesis about this refinancing they did. So it seems Sarepta, they know what they're doing. They know what they're doing, given what has happened with Elevidys and all the other drugs they have in their pipeline. They know that they are possibly buyout targets. So by doing this refinancing, they extended what they did in the refinancing is that they now extended the $700 million that is due by 2027. They extended it to 2030. So by doing so, they have now ensured that they are a cleaner and easier bet for big pharmaceutical companies to target. So the speculation is that between next year or the year after, that is between 2026 and 2027, from now up to 2027, there's a good chance you might hear that SRPT might be a target, an acquisition target. So as I've already mentioned what the structure is, it's now $602 million in new shares. Sorry, $606 million, $603 million, $602 million in debt, and then $123 million in cash. The debt is at 4.87%, and then up to $6.7 million have been diluted. Hence the reason why we saw that plunge on the 21st of August. So the impact of this refinancing, it extends the runway, improves financial flexibility, and dilutes shareholders slightly. The strategic angles that it positions the company to keep funding gene therapy pipeline, the gene therapy pipeline of the company, which includes Elevidys RNAi SRP-1003. So in terms of financial stability and making the company more attractive, prior to this deal, the company's 2027 debt maturity was a red flag for potential acquirers. Extending this to 2030 clears the near-term overhang, making the company a cleaner acquisition target. So there's a big appetite out there for rare disease and gene therapy assets. So Elevidys being obviously the prime product that Sarepta now has is first-in-class DMD therapy, and even with regulatory challenges, it presents a foothold in a multi-billion-dollar rare disease market. The sort of companies that can get involved: Roche, Pfizer, Novartis, Vertex, and they are all aggressively hunting gene therapy and RNA assets. So Sarepta's pipeline breadth, RNA, gene editing, gene therapy, fits squarely into the sort of things they are looking for. So in terms of regulatory overhang, so with Elevidys shipments resuming, they may have resumed, so the company now looks less risky. Big pharmaceutical companies prefer to acquire now before Sarepta stabilizes and valuation runs higher. You see, even now it's even a better bet, a better target, because things are just came out of Elevidys being paused, shipments being paused and all that. So yeah, as the days progress, the valuation is going to increase, and yeah, so anytime soon you may hear something, but I could be totally wrong. So So strategic fit as well. There are other things as well. This is a strategic fit to all of this. So Sarepta's RNAi collaboration with Arrowhead, the gene therapy expertise and large manufacturing infrastructure makes it plug and play for bigger farm expansion. So in terms of the numbers, the valuation price target for buyout, we have been able to come up with some figures. So given the current market cap as of this year, as of this month rather, between 10 to 12 billion dollars, depending on fluctuations. So take out premium range will be, historically, biotech firms carry a 30 to 70% buyout premium. And then given Sarepta's size, we have maybe 40 to 50% premium. It looks quite realistic as well. So price per share, if the stock is trading at around $120 per share, buyouts could be up to 170 to 200 billion. Sorry, if the stock is trading at $120 per share, so if they're going to buy it, remember I said the premium will be 40 to 50%. Then we now have a target, a buyout price of $170 to $200 per share. Okay, so at a market cap of around $12 billion, then you have buyout price of around 17 to $20 billion, for the acquisition. It aligns with previous precedents. Roche with Spark, Novartis with Avexis. So buyout scenarios. So the bullish case will be if Elevidys adoption ramps up strongly, sales is up more than $2 billion, and then SRP-1003 phase 1 of 2 data shows early efficacy, and then big pharma bidders compete, Pfizer, Roche, Novartis, Vertex, and then regulatory risk fades under FDA cooperation. Then we're looking at the possibility of $22 billion, and then price per share will be like $210 to $230 per share. Yeah, that's a bullish case. That would be really ambitious, but never say never. So the base case will be Elevidys adoption steady but below peak, pipeline optionality, RNAi SRP-1000 valued moderately, one major buyer steps in, 40 to 50% premium. Then we're looking at implied valuation of between 17 to 18 billion dollars and market cap, and then 170 to 200 $200 per share. So the bullish case will be a case where Elevidys sales stalls due to regulatory or safety pushback, pipeline seen as high risk, and then only opportunistic buyers will come in to see if they can bid for the company. Then we're looking at a valuation of 13 to $14 billion in market cap, and then that will be $140 to $150 per share. But mind you, the stock is currently trading at $18 per share, so that will be a 10x from current levels. But the reality is that there's a good chance that all of these scenarios, and indeed any other thing that you may probably think of, may combine. It will not always be the way I just put them. It could be a combination of scenarios, and so it's just going to be, it can be possibly mixed up. But what is absolutely certain is that Sarepta, they know what they're doing. They know very well what they're doing by doing this debt refinancing. They know very well what they're doing. So the refinancing was critical. It removes the 2027 overhang, making Sarepta more digestible for big pharmaceutical companies. So a $170 to $200 per share range looks like the most realistic buyout window under the current market sentiment. I mean, who says? I mean, but you know, just see what you think about that. You know, refinancing removes a key barrier to acquisition by de-risking the company's balance sheet. Makes a buyout more likely between now and 2027, especially if Elevidys shows strong adoption. A realistic buyout range looks like $170 to $200 per share, with upside if competitive bidding emerges among pharmaceutical suitors. So, what's your thoughts? What's your thoughts about around all of these? Drop your comments. Let me know what you think, and thank you very much for watching this video.